Going forward then, and let's also put out the big questions that we will be watching out for, and we will try to take an answer from both of our experts whether or not where do you should bet on in the times ahead, as well as which are the levels that you need to be watching out for when it comes to the benchmark indices. And to answer the same, let me welcome on board Rajesh Palviya on the technical side, who is the head technical and derivative research at Axis Securities, and on the fundamental side we're being joined by Mahantesh Sabarad. Very good afternoon, both of you gentlemen, and thank you so much for your time. Rajesh, coming to you, record high levels coming in for Nifty 50. Where are you eyeing next? Is 21,000 also on cards? And on the bank Nifty, 1,000 points gain in the past 4 days, but to touch that record high level, just 1,500 points away we are from. So do you believe that the journey for the next 1,500 could also be this fast, or markets are expected to take a halt?
Good afternoon, Srishti. Good afternoon, everyone. So very strong really in the market. Both indices have done well. We are at all-time high for the Nifty. Very strong buying action across the board. Mid-cap, small-cap are continuously performing and making a new all-time high. So overall, market sentiment is super bullish. So we believe that this momentum is likely to continue further as you talked about the banking space. Most of the PSU and private banks have started performing, and the recovery is taking place in the PSU space, or PSU bank also. So that clearly shows that yes, the bank Nifty can give further more support to the market at this moment, and we can see there is the catch-up rate in the bank Nifty, and possibly we can see a level of 45,600 to 45,800 in the continuation of this up move for bank Nifty. On the downside, the important support area for bank Nifty is now placed at around 44,400. Till these levels are intact, buy on dip should be your strategy for bank Nifty. And yes, possibly we can see bank Nifty can also have a move further to reach to the all-time high trajectory in coming weeks. And for Nifty, we are expecting this rally can extend towards 20,450, 20,500 kind of zone. So one can remain on the long side of trade. 20,100 is important level. Till these levels are intact, we expect this rally can continue, and we may see a further more bullish momentum going forward for market.
Well, so buy on dip strategy, that's the outlook coming in for Bank Nifty from Rajesh. Hello, Rajesh and Mahantesh. Welcome on board. This is Lisa on the other side. Mahantesh, my question goes to you. It's regarding election. It's the flavor of the season right now. I wanted to ask, the exit poll that is out, the results are out, but the market on Monday, that will mostly react to the results of the election. So it was expected that the market may see some pressure before the elections, but it has shrugged off those fears, and we are seeing record high levels. So what do you think on how will the market react next week, considering the election factor?
Well, Lisa, you see the elections have had their effect already on the markets. In fact, you would have noticed that the FIIs, and you yourself kind of mentioned it, that the FII selling spree that continued for about 3 odd months has reversed and become positive. That's a story that can be interpreted with the relation to the elections that are happening here, that the foreign investment money is still coming in, and they're shrugging off the election event. They're shrugging off the risk related to the election event. Probably they have taken a view about what's likely to be the direction for the markets ahead in terms of a positive direction, and that's why we are seeing the Nifty reaching a new record level this week. Having said that, on the domestic side, we have continuously seen that the confidence born on the domestic investors in the markets has continued to remain pretty strong, and that has been one of the factors driving the markets up, steadily up, despite the bouts of selling from FIIs that we have seen. So I believe that we will continue to see newer highs as far as the markets are concerned, and the going seems to be properly laid out. All the pieces of the jigsaw puzzle are now kind of in place. You have had election results out of the way, or elections out of the way. You have the economy growing strong post-COVID, and surprisingly within the economy, the manufacturing sector has rebounded quite sharply. We now also have an event which was in place already in terms of interest rates stabilizing, and the final piece of the jigsaw puzzle is that the geopolitical situation across the globe is somewhat easing off post the warlike situation we had seen around Israel-Hamas. So I think these jigsaw puzzles pieces now being in place, the markets will look for newer territory in terms of highs to be made.
Okay, so that's the take coming in from Mahantesh. But one of the major upcoming events, Mahantesh, is the RBI policy. Though the expectations are not much, and the street is expecting that once again there could pause coming in from the RBI. But apart from the policy, in bits and bits, we did see that RBI coming out with the announcements for the banking sector, which had the major impact, case in point being the risk weight asset adjustment. So what's your take regarding the RBI policy? Anything that you are expecting, and how could be the likely impact on the market movement?
See, as far as RBI is concerned, I think the policy stance has been pretty much smooth in terms of the transition that we saw from pre-COVID to the post-COVID, where the interest rates were rapidly adjusted to encounter the rising inflation kind of situation. Now, inflation has not been entirely tamed per se, but one can say that the policy rate action from the RBI is kind of now halted. But the risk related to the banking sector, which is what the RBI is getting increasingly worried about, and which is what you alluded to, is a slight of kind of going up. But you know one of the factors that I've been observing when it comes to the banking sector is that there are various pieces of lending, various sectors that they lend to, and the manufacturing sector was plagued with a kind of low capex, low output kind of situation. That has now gone away, and therefore the corporate side of the banking piece is growing beautifully well. It's on the consumer side of the banking is what the RBI is getting worried about, and that's what we saw in terms of the risk weight stance that the RBI dictated related to that. But even there, what can be clearly seen is the lower end of the consumer lending is what is getting a bit more riskier, and that's what the RBI has recognized, and therefore that particular piece of RBI's policy stance may take a while to get unwound. So I'm not saying that the RBI will change its stance related to the risk in the market, but they have definitely changed their stance related to the policy rates, and we will see inflation increasingly getting tamed soon.
Well, Mahantesh, thank you for your take on the RBI monetary policy. But with that, let's slip into a short break. But post the break, we will get more clarity on the market outlook ahead from our experts. So stay put on the show. Welcome back to the show, and we continue with our getting our queries and the clarity on the market from our experts. So Mahantesh as well as Rajesh. Mahantesh, my question is to you on the power sector. We saw the PSU stocks the PSU power stocks are buzzing now. What do you think about REC as well as PSC? They are at an all-time high, and if I look at the one-year chart also, it's up more than 200%. Even the valuation picture that is quite high. So are the valuations expected to sustain, and what do you think about the overall the power sector as a whole?
When you talk about the PSU power names that you just named, they are into actually financing business related to the power sector, not necessarily per se power stock. But what has happened for the power sector as a whole is that unlike in the past, we've seen a lot of power plants are now getting getting out of the NPA kind of situation that existed before. So most of their bad loan situation within the power sector is now going away, and therefore the sector has become much more stable. We have renewed investments coming in the power sector, particularly on the renewable side, not necessarily on the thermal side. That is providing a bit of growth to these financing companies. So there is credit growth, there is less of NPA situation kind of worry for them, and that's where valuations have expanded. But if a stock is rising 200% in a year, that takes it into actually an unsustainable kind of zone, irrespective of where you start off from in terms of valuation. So I suspect that these stocks will soon correct. As far as the other power stocks are concerned, which are actually into power generation and power distribution, the distribution piece is actually doing better relative to the generation piece right now. And like I said, there is kind of a stable outlook as far as powers are concerned. They are finally utilities. They will continue to power will continue to get consumed. They'll continue to earn revenues at a steady pace. And we don't see much growth in terms of overall revenue for them because rates, that is the power rates hike situation, has not yet come into the picture. If that happens, probably the sector will get a leg up.
Okay, Mahantesh, thank you so much for highlighting what's actually fueling the powering rally in these stocks. But Rajesh, coming to you, and we did discuss quite many sectors now, but on the stock-specific ideas, which are the counters that you have your eye on?
So, Srishti, first stock is from oil and gas space, that is GAIL. Very strong buying action across the sector, and looking at the overall sector momentum, we believe that GAIL can continue. Furthermore, upside rollover action was on the buying side, and it clearly shows that we can see a follow-up action in the December series itself, and we can see a target of 145 to 148 for GAIL in the continuation of this uptrend. One can buy GAIL with stop loss of 132. The second stock that we like is from PSU Bank basket, that is PNB. 97% rollover, and most of the PSU bank stocks are now performing. And looking at the breakout on the weekly chart, we expect that PNB can scale up to the level of 88. So one can buy PNB with stop loss of 77. And the third stock is ITC. After a consolidation of last 5 weeks of very narrow price range, now stock is breaking out of this consolidation range. Looking at the breakout in today's session is clearly showing that now stock can move further higher towards 470, 75 kind of level on the higher side. So one can buy ITC with stop loss of 440.
Okay, Rajesh, thank you so much for sharing your top stock-specific ideas. But with this, we are timed out, and would like to thank both of you, Mahantesh as well as Rajesh, for joining us today and helping our viewers understand what are the likely triggers for the markets and what you should be looking out for in the upcoming week. But in the upcoming week, there is going to be an important event to track. On the Monday itself, markets will be reacting to the election results. And how will the uncertainty steaming up from the elections impact the markets? Will the market see any significant correction? And how should investors proceed? Let's listen in to market experts Ashwini Agrawal, Gautam Trivedi and Vikas Khemani as they talk about all this and more.